So today we're going to discuss QE, but particularly why the slow coaches, such as particularly Japan and Europe, have struggled to get any real traction out of their QE programs, particularly in contrast with the English-speaking countries such as the US and the UK.
I think QE works in different ways for different places, Ken. So you take the English-speaking countries, for example, with their love affair with debt, clearly they've done very well out of QE, particularly the way house prices have risen, asset price appreciation. And then you look at other countries like, say, the BOJ, Japan, they've relied more on the currency channel to do the heavy lifting. And then you look at the situation with ECB in Europe, it's been predominantly a lending channel.
I just add to that, I think, if you look at the saving bases in those countries, if you look at Japan, as you mentioned, roughly 70% of their savings are sitting in fixed income and cash, and now you've got negative yields. It's really starting to impact, I guess, that saving base of pension funds, the life insurance reserve money, and the banking sector. Similarly, in Europe, huge amounts of money sitting inside the fixed income and cash markets, in contrast to the US or the Anglo countries, where a lot of the saving base sits inside property and equities. So that QE's really sort of put the impetus into the price structures of those asset classes and helped, I guess, flow through to the wealth effect. And I think that's part of what we're seeing in those countries.
If you look at Europe and you look at their savings habits, bonds and deposits. So the financial repression of QE, where savers have been hurt and borrowers have been advantaged. So Tano, I agree with you to say, well, the biggest borrowers, those who are comfortable taking on the debt, such as the Anglo countries, have done well. But in Europe at the moment, it is now raising its head that there are no real winners out of QE. But there are winners. The winners are corporates. The business community have done exceptionally well, as we know.
You can talk about targeted QE approach, and I think that's very valid. But I think also there's probably a recognition starting to develop now in markets. It's probably a consensus that QE's been ineffective in distributing the wealth effect across the broader economies. And I guess things like Brexit, things like the rise of Trump and the anti-establishment type vote, I think is part of that sort of story. And so, yes, targeted QE could be part of the solution, but I think there's other sort of government tool sets. And I think fiscal policy is definitely the one that's kind of coming to the fore at the moment in discussions. In the American electoral cycle, we're seeing both Trump and Hillary Clinton talk about, fiscal expenditure.
It's interesting there because I think the political will may not be there just as much as, say, the willpower wasn't there for central banks to overstimulate when they had the opportunity early on. So, and I think what we're really picking up on here in the markets is there's just a lack of credibility coming through from the central banks and just a despondency in the way that they've actually gone about this. When they had the opportunity, they really should have done a lot more.
But looking forward, what are the tools that we've got available? So Mark, I agree, and we've talked about fiscal spending for some time now at a couple of these chats. And yes, and it may come through in the US, and there's no doubt that fiscal spending is most probably the best inflationary spur, much better than these low interest rates. History has shown that it does. So you're most probably going to hit your inflation targets. Whether you get the growth, you're going to get some employment. Are there any other tools? And what do the Europeans do? Because the Europeans have got these split economies. You've got Germany on the one side. They don't need the stimulus. German business confidence, what the recent figures show, it's the highest level for 8 or 9 years. So Germany's fine, but the slower areas of Europe need everything they can get. So I do despair a little bit for Europe. I think
there needs to be structural reform, because even though I would argue the bank lending channel is the way QE would work with the ECB in Europe, it's still a very fractured banking system. Yep. You go across the jurisdictions from one country to the next, and you've got very different sort of bank lending rates. So it's hard to see, without a harmonised banking system, how you can get a real effectiveness out of QE through the banking channel.
And just a quick one, guys, back at home base here in Australia. How do we fit in? We sometimes say we haven't had QE here, but we've had it in spades. We've just had the second, third order effects. They export the QE. We get that institutional buying, retail buying out of Japan, buying our bond yields down to levels way below where domestic investors are comfortable to hold them. So we have had that QE coming through. Going forward, do we need a shift as well? Do we need a shift?
Well, we do. We do, because we really haven't de-levered since the GFC. So whilst we can look with a critical eye to Europe and Japan, they have de-levered to some extent through their austerity measures. Australia's debt to GDP is higher as ever has been. So I think we need to look elsewhere to pick up the slack.
One thing I sort of comment about what we've seen, the flow-on effect, is obviously house prices. It's obviously all over the media. Up roughly say 90% across the major capital cities. Certainly Sydney and Melbourne, less so Australia wide, around about 70% in the pre-GFC period. But that's huge amounts of price appreciation. That's one of the big kickers, I guess, of the average Australian wealth story. Equity markets, superannuation funds, similar sort of story there. So that's certainly flowing through. The next stage, I guess, is, in my mind, is what replaces the weakness we're seeing in the mining resource sector. And to date, we've seen the Aussie dollar doing some of the heavy lifting there with regards to the East Coast sectors. And I think there is also probably a bit more to be done from the government sector as well in that space.
All right, guys. Well, I think we've given that a good crack at QE, and I don't think we've come with the great solutions. But until we chat again, over and out.